Welcome to ShortView Trading. It's your morning market hit for Wednesday, 17th of June. What matters today for traders? The importance of the Fed to these markets was reiterated again yesterday. That was in particular in reaction to comments by Jerome Powell during his Q&A session up on the Hill during his semi-annual testimony to Congress. Jerome Powell talked about the Fed not wanting to be the elephant in the room, trampling through price discovery in the corporate bond market. That triggered a short-term sell-off in corporate bonds. You can see that now in the LQD and in the JNK. The ETFs of the high-grade and high-yield corporate bonds both sold off sharply around the time of that Q&A. But then the resolve and the resilience of this market was demonstrated once again as those markets rallied after those comments and after the end of that Q&A. Indeed, both spreads closed tighter on the session, with prices higher. As articulated yesterday, corporate bonds are a good proxy for risk premia in corporate equities. And of course, the price pattern of the two tends to be very similar. Indeed, you can see the S&P chart in front of you now. The price action during the session was very similar to that we saw in the corporate bond market. That is a sell-off during that Q&A and then a rally into the close. So spreads closed tighter yesterday, pretty much across the corporate bond curve. Equities closed higher and demonstrated remarkable resilience. Supporting that was also the macro data we had out yesterday, particularly strong on the retail sales side in the US. Indeed, May's retail sales came in at plus 17.7% month on month versus an expectation of 8% and change. The key here being the outperformance. Naturally, it bounces hard post-lockdown as that lockdown is easing into May from April, but much better than expected by the consensus of the economists. So the lockdown data keeps outperforming, supporting this market. If you look at the Citi Economic Surprise Index for the US, it's reached its highest on record in just short of 20 years yesterday. So that's driving equities higher. Added to that, our short-term models are on buy, whether it's the short-term risk appetite scoring system or the short-term technical scoring system, albeit not the put to call ratio. For the full analysis of how we're approaching this market on a 1 to 2 week view, please see today's daily rag available to subscribers and on the website. So what are we watching today? Well, the macro data is primarily focused on US housing, in particular starts and permits out later on this afternoon, London time. But also there's a second round of testimony from Jerome Powell up on the Hill, this time to the House. That's also at 3 p.m. London time. And the Q&A is what people will be watching most closely. The statement should be the same. The Q&A will be the key. So that's it from us. That's your morning market hit for Wednesday, the 16th of June. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe, trade well.